Let's take a look at an example. If the GPI for Floral Heights apartment is $150,000, this would be the maximum income Floral Heights could generate from rents. You wouldn't be able to go up any higher than $150,000 for this property in this market. If you were to achieve this rental income, you would be operating at 100% efficiency. Now, let's say we were to look through the profit and loss statements for this apartment and found that they were only collecting $125,000. Okay, well, in that case, Floral Heights would be operating not at 100% efficiency, but at an 83% efficiency. Do you see why it's important to understand GPI? If you don't know your maximum rental income potential, how would you know how efficiently the property is being operated? Okay, in this example, it looks like they're operating at an 83% efficiency, which means that you have a maximum 17% of value add opportunity. When you take over as the new owner, you now know that you can make some sort of a management change on this property and try to capture some of that 17% income potential that was being left on the table by the previous owner. Now, before we move on, let me reinforce something. Please note that when we calculate GPI, we are only considering the maximum income potential from rents only, not other income streams such as laundry income, late fees, pet fees. Not that. We're not considering that into our GPI. Okay, that's going to be a separate line item. Now I'll get to that in a later section. So just for now, for GPI, just make sure you're calculating just rents. So I hope that's clear. Now, before we talk about the next topic, which is going to be the effective gross income, I need to take you on a tangent a little bit, and we need to talk about vacancy and other factors used in calculating income.